tax on returns, among other benefits, makes tax-free bonds one of the most sought-after investments in the market. Hi everyone, I am Bhavna from ClearTax. Today, let's discuss tax-free bonds in detail. So, what are these tax-free bonds? Tax-free bonds are issued by a government enterprise to raise funds for a particular purpose. One example of these bonds is the municipal bonds. They offer a fixed interest rate and hence is a low-risk investment avenue. As the name suggests, it's the most attractive feature is its absolute tax exemption as per Section 10 of the Income Tax Act. Tax-free bonds generally have a long-term maturity of 10 years or more. The government invests the money collected from these bonds in infrastructure as well as housing. So now, let's look at who should invest in tax-free bonds. Tax-free bonds are an excellent choice for investors looking for fixed income like senior citizens, as government enterprises typically issue these bonds for a longer tenure. Default risk is very less in these bonds and you're assured of a fixed income for a more extended period, typically 10 years or more. Tax-free bonds are the right choice for investors falling in the highest tax bracket, typically high net worth individuals, Hindu Undivided Family members, trust, cooperative banks, and qualified institutional investors prefer to invest in these bonds. So now, let's look at the prominent features of tax-free bonds. Number 1. Tax exemption. In the case of tax-free bonds, the interest income is entirely tax exempt. Also, the tax deducted at source does not apply to these bonds. Number 2. Risk factor. Chances of defaulting on interest payment are very low as these schemes are from the government itself. Also, it offers capital protection and a fixed monthly or annual income. Hence, it can be considered quite safe. Number 3. Liquidity. You cannot liquidate tax-free bonds as quickly as, say, debt funds. Since government bonds are long-term investments and have more extended lock-in periods, liquidation of the bonds may not be that easy. Number 4. Lock-in tenure. Tax-free bonds have higher lock-in period that range from 10 years to 20 years. You cannot withdraw your money before the maturity date. 5. Interest. The rate of interest offered on tax-free bonds generally ranges between 5.5% to 6.5%, which is fairly attractive when considering the tax exemption on these bonds. A bondholder receives the interest annually. However, the rates are subject to fluctuations as they are related to the current rate of government securities. Now, let's look at a few examples of tax-free bonds. Many public sector undertakings issue tax-free bonds. National Highway Authority of India, NTPC Limited, Indian Railways and Rural Electrification Corporation are some of the most popular ones. A few other examples include Housing and Urban Development Corporation, Indian Renewable Energy Development Agency, Rural Electrification Limited and Power Finance Corporation. So, how does one invest in tax-free bonds? Tax-free bonds have trading options that allow bond trading through a demat account or via a physical form. Therefore, investing in these bonds is simple and highly rewarding. Remember, the subscription period for this investment is open only for a specific time. You will be required to submit your PAN details when you buy the physical form. When the government releases them to the public, an investor can subscribe by applying online or offline. On the other hand, if an investor requests for the bond post issuance, he or she can invest using the trading account. Hence, it is much similar to trading shares in a stock market. I hope this video gave you a fair idea about tax-free bonds. For more information, please visit our detailed page on tax-free bonds. You can find the link to this page in the description box below. If you like this video, please do like, share and comment, and do not forget to subscribe to our channel so that you get a notification every time we upload a new video. Stay tuned for more updates.